Welcome to the Hurley Investments Market View Commentary for Monday, the 23rd of October. I am still in, where am I at? I'm still in Texas, in Houston, and I'll be heading home Thursday. With that said, let's go over a couple things. First thing, Mary lost big time on her day trading bet. So just for the record, Mary, bad guess on using the post-market futures. That's probably the least amount of traded futures after hours, and it's also most likely one of the least reliable indicators to use on the next day's movement. With that said, let's take a quick peek at our indexes. And I'm going to go through the question that was asked about the indexes here just a minute. Right now, in 1 week, the Dow Jones has turned bearish, and we are almost oversold. If we were to look at the S&P, in 1 week, we have turned bearish and broke the 200-day simple moving average. Huge one. I am surprised we held today. I thought we'd be heading down to at least 4,100, if not 4,050-ish. And if I was also to look at the NASDAQ, we also turned bearish. But the question that was asked on me came down to, what is the most important index to use for market movement? And I'm just going to ask you guys, what in your opinion would be the most important index for market movement? It's what you're going to use to help make your decisions, right? So what is that for you guys? So I see a couple S&Ps, I see a VIX. It depends on the market you want to trade. S&P 500. You know what? I should have been more specific, but yes, I'm probably going to go with the S&P 500, and I'm going to stipulate for the USA, right? USA markets. And there's a reason why. Number one, if I'm going to use the big three, right? Let's talk about the Dow, the NASDAQ, the S&P 500. Yes, we could use the New York Stock Exchange. That's probably fourth. And if I went down, the New York Stock Exchange is roughly 2,800 companies. I would definitely put it is the fourth common index. And no, I'm not forgetting that we have the Russell, and there are 4 or 5, Russells. You have the Wilshire, and you probably have the S&P indexes / ETFs. And yes, there are many. I mean, if you want to, what I probably should also put in there, you probably could put in there the VIX. The VIX is also a pretty popular one. But no one, in all honesty, is going to trade no one's going to trade the Amex. No one's going to trade the CBOE indexes, whether it's their volatility index, their buy right indexes. That's just not what we're going to use. The Dow Jones Industrial Index is used over the transportation or the utility averages. No one really uses the Barron's 400. We will use the NASDAQ Composite, but we won't use the NASDAQ 100 or the NASDAQ Financial 100. You do have the Russell indexes that are published by the Russell investment groups. And I think it's the Russell 200. You have the mid caps, the 250, the 1000, the 3000, the small cap index. And then you have the S&P mid caps, small caps, 1500, the S&P 100. They're just not used. You're not going to see the Wilshire 4000 or 5000. And the reason why comes down to kind of this, right? We have the Dow. Someone tell me, what is the Dow? So what is the Dow Industrial Index? What is it? Dow Jones Industrial. What? Someone tell me what that is. Does anybody know what it is? There we go. So it's just, right now it's correct. Right now it's just 30 stocks that represent less than 1% of the stock market cap. So if you wanted a good picture of what's in the index and what's moving, what's not, would you use the Dow? There we go. Yeah, no, it's less than 1% of the stock market capitalization. It is such a small set of classes that it doesn't represent the market accurately. It is what I would call or tell you, it is a TV index, something that's used for the TV. It did trade 342.5 million shares today. And I'm still going to tell you it is a TV index. If you ever hear someone that is choosing to use the Dow for a representation of the market or thinks that it's important, that is probably someone you should not be following what they're doing. Does anyone disagree with me? Also used by people living in the 20s and 30s. Well, again, yes, it's a traditional index. It's a TV index. It's there because it's always been there, kind of thing. Very true. All right, here we go then. Let's go to the NASDAQ. And we usually call it the NASDAQ Composite. If you have a T key that will work, NASDAQ Composite, it's 3,700 stocks, but tech heavy in general. There are more than tech, but it's considered tech heavy. In fact, I was a little shocked. If you look at the NASDAQ that was traded today, it only traded 3.7 billion shares. Rather interesting. it's more or closer to the S&P 500. And really you could say, well, Kevin, isn't it tech/financial heavy? Yes. But big money will use the S&P 500. Someone tell me, what's the S&P 500? I'm going to trick you on this one, I think. What's the S&P 500? Someone tell me. Somebody, anyone, type something in. Everything not in the other indexes. That is not true. In fact, everything that's in the Dow is in the S&P 500. And I would say probably 80 to 90% of the S&P 500 is also in the NASDAQ. Abraham, Allrest 500 US. The biggest 500 US, it's not even the biggest anymore. That has since changed. But it is supposed to be 500, but the real answer is 503 stocks that best represent the blue chip modern America workforce. Three stocks have two share classes in the 500, and I'm 99.9% sure that is Alphabet. Come on, my gosh, that Tiki, I need a new one. Alphabet, Fox Corp. Alphabet, Fox Corp. What's the third one? It's like a no-name one. Nope, it's not Berkshire Hathaway. It's Fox Corp. News Corp. News Corp is the other one. They have Class A and B shares in them. And they're different kinds. They're weighted, they're non-weighted. It's a couple different ones that you can look at. But for the most part, those are the indexes, and it's the S&P 500 that best represents where our stock market is going and why. Last Monday, I talked about, hey, yes, you can make money on the S&P 500, and you can make money on calls and puts using it, right? Maybe even said that last Thursday. But I'm really sure when I spoke, we were right here, and I was saying, in fact, it wasn't last week, it was the week before on Thursday. I'm like, don't buy any calls. Don't buy any calls because this is a great representation of being in a range. We have a top, we have a bottom, we have a trying to create a base, we have a gap, we have a top that has the 50-day simple moving average acting as resistance. I don't know if it was last Monday or it could have been the Thursday before. I said, yes, you use puts on the way down. And yes, we've been using puts on the way down. On the way up, you want to use calls. Puts make money on the way down, calls make money on the way up. If they're long calls, but we have a problem. Houston, we have a problem. What did our market do today? Well, actually yesterday on Friday, but Today is important too. What did our market do today? On the S&P 500. And it might already be written on this page. Yes, it went down, but more importantly, it went down doing something. What did it go down doing? Holding its nose. Goodness gracious, Bill, you need more education. This red line is extremely important. Thank you, Maud. Thank you, Mary, both of you. It's under or it broke. It confirmed a break on the 200-day simple moving average. So someone tell me in plain English, what does that mean? This is a huge technical indicator right here. If anyone is using charts, what does that mean? Maud said it's usually a sell signal for major institutions. Yes, that is correct. I'm looking for more though. Tell me more. New lows, that is also correct, Lee. But I'm looking for something a little more specific than new lows, but you are exactly correct with both of those. Why is it a major sell sign for institutions? Why are we going to go to new lows? There's something extremely important with breaking a simple moving average. It will act as resistance as it comes back, but there's something more important than that even. Plain English, plain thinking. Boy, I wish Jim Kohler was here. I like Jim Kohler's shot at some of these answers too. He let me know he was traveling this week. All right. The big concern about this break, in plain English, there were no more buy orders placed here 30 days out to support the market. Out of 2.4 billion index shares traded, there are no more buy orders to keep it above that level. If you were to ask me, I would tell you right out of the gates, 4,100 is where we're heading to, and 40.50 is our next step on the way down. If there are no more buy orders, that means usually a stock will not. Put some of this down here because I'm just doing it. S&P 500 broke the 200-day simple moving average, so there are no more buy orders at that level. Next level is 4,100, and then from there, I think it's 40.45. What does that also mean? Most individual stocks will not be moving against the index. Low tides sink all ships. Doesn't mean some can, but major resistance level down below it on Friday. This is your second day that it is confirming it. Houston, we have a problem. We have a problem that we may look to next week. Is it next week? Got to check my stuff here. We may be looking to November 1st for a rate hike. And nobody right now is interested in purchasing stocks before that rate hike, which means big institutions that can't buy or sell daily right now are placing their bets, and they're probably putting buy orders right around 4,200, excuse me, sell orders at 4,200 and buy orders down at that 40.45, the lows back in May and April. They've got a breadth of a spread. They've got a spread to let the markets move. Buy orders are probably down at the most recent lows for the last 6 months, with again that 40.45. Buy orders will be really probably placed around that 200-day, which is going to be at 42.35. Herd mentality. So it's interesting because I was mentioning this, and so the next question that was asked for me, and I should add, Mary, does that answer your questions about indexes and how we use them? But the next question is asked to me, so why do you trade individual stocks? If I can spell. And Mary, if you want to go back to something here, I'll go back to something here. But someone tell me, why at Hurley Investments do we trade individual stocks? Dave and David, you've been around long enough that you should have an answer. Bill, you should have an answer. Abraham, you should have an answer. You just put one in there. Lee and Maud, you guys might have an answer. Mark, I think you've come from Safe Option Strategies, so you might have an answer too there. I'd love to hear one from you. Abraham says beta. Volatility to be able to dollar cost average without asking for more money. I like that one. Someone else, why do we trade individual stocks instead of the stock market? Because mutual funds don't beat the market 96% of the time. That actually might be 93. I don't actually know. I can't remember what my last one is, but Dave, I'll put it in there at 96, what you just typed in, because I agree with you. Because mutual funds don't beat the market 96% of the time, and that's primarily due to fees, which are somewhere between 5 to 11% always. Okay, take advantage of price declines in good companies. I love that one. That's part of the volatility, being able to dollar cost average without asking for more money. How about I'll give some personal ones, right? And Dave, I actually expected this one out of you. You didn't say that, but you can't beat the market if you are the market, right? You can't beat the market if you are the market. It doesn't work that way. It just doesn't work that way. You can't beat the market if you're the market. Why? Cost of purchasing your shares. Because you have a management fee. Because you're not big enough. because your system won't work. So there are just some things that you need to take in mind if you're trying to be the market, right? That's why a lot of people don't make money on annuities. Plus the fees that are hidden in annuities. It's ridiculous. I'm going to give you one other one. The belief in Warren Buffett investing. Underpriced, fundamentally sound companies. There is no time frame for returns. For him, it's easier. That son of a gun is a billionaire. He can wait for forever. And he does a killing. But if you study Warren Buffett, he goes into underpriced companies that have huge upside opportunity. That's part of what Key was trying to go over with you guys last Thursday. Well, Kevin, Disney sucks. I've heard that. But does it suck fundamentally? And that's kind of the question, right? How bad does Disney suck? Well, we learned from its earnings, there's not a problem with their parks. There's no problem with their parks and their attendance. Can anyone remember what was the problem with Disney last earnings? What was the problem with Disney? And Bill, you're not allowed to mention because I already talked this one with you. So no comments from Bill unless it's peanut gallery comments. What's the problem with Disney? ADP said too woke for me. Yeah, they've blown it on a couple. They got 4 earnings and a fight with DeSantis in Florida that they blew it. What happened to that person that allowed that to happen? What happened to that person that allowed that to happen? Anyone know? Got fired, got canned, right? Chapek is out. He blew it. For being the cowboy, the rough and tough, he blew it and he's gone. Iger's back. The person that put him to 165 is back. Fundamentally sound. Market cap of 152 billion. Oh, well, let me just go through this and we'll go back to it. Income 2.25 billion. Book to share is $53.34. If you sold everything off, you'd get $53.34 for a stock that's trading at $83 right now. Cash per share, $6.26. On hand cash, $6.26. PE, way high, ridiculous. Forward PE, 17.49. Not really attractive, to be honest with you. Long-term debt, perfectly in line. Earnings this year, not very good, but earnings next year looks fabulous. A 28.95% earnings expectation next year. Next year would be the rebound. Gross margins are good. Operating margins are low. Profit margin is also low, though. The question I asked you, what was the problem with Disney? Lost a cricket broadcast in India, and also lost 8 million Indian Disney Plus subscribers. Is that important? I don't know. I gotta believe they're paying less over in India for Disney Plus than a US dollar's worth here. They didn't lose all the rights. Iger came in and saved some of those rights, but they lost some revenue. Am I worried about Disney? I'm not going to say I'm not, but if I take a look at what we have coming out here, they had their $1 billion movie with Guardians of the Galaxy 3. Let's go into next year. Where's next year? Haunted Mansion seems to be doing pretty good. The Marvels that comes out on November 10th will be their next $1 million movie for the Avengers. Next billion with a B, excuse me. That'll be the next $1 billion movie for these guys. I don't know what Wish is. I don't know what ELO is, but we do have Snow White and the Seven Dwarfs. We will see how badly they screw that one up. If they even release it or if they scrub it. People are kind of getting into, again, it's more of the woke stuff. Well, you're woke and you're now discriminating against dwarfs because there's no dwarfs, but you hit multiple different ethnic people, I guess is what they're trying to say. But then you have Deadpool. It'll be a raunchy movie that will at least get another 500 million. Inside Out 2 looks like a $500 million. The Lion King could be another $1 billion movie, but it'll be different to see how they come up with that one. And then they'll finish off next year with Captain America and Thunderbolts. Again, one of those two could be a $1 billion movie, probably Captain America. I like where they are adding up. I like that we added 100 shares through profit protection just last week or the week before on Disney. The main question for investing, are you patient enough to wait for the rebound in stocks? Even if stocks are falling and stocks that you trade are falling in an up year of the market. So they're a market dog, right? Can someone tell me, what do you know about market dogs? What do we know about market dogs? Someone tell me. Can anyone tell me? What do we know about a market dogs? They tend to do better the following year. Mod, perfect. That is the general understanding of market dogs. They do tend to do better the following year. So that's our questions. Big picture, big problem for right now is that it's too expensive to buy a house. It's too expensive to buy a house, and what individual Fed chairs are saying versus what Powell is saying is different. We don't know if we're going to how many rate hikes we're going to get. We don't know how many cuts we're going to get. We probably don't see a rate cut until the end of next year. Boats are cheaper. But obviously inflation is not transitory, and boy, last Wednesday was 3 hours of great information of Powell sounding like Greenspan. 3.5 hours of saying a lot and not coming to a conclusion on anything. Well, we could do rate hikes next year and none this year. Well, we could do rate cuts next year, but we got to tread carefully because we're just at that 12 to 18 month time where the rate cuts that we did are coming into play. Basically, they don't know what's going on, so they're going to be careful. But the expectation is still for one more rate cut. Will it come in November? November 1st for us? Will it come in December and kill a Christmas rally? Will it come in January? I'm actually tending to think that we'll have a rate cut in January, even though I would have bet my house we'd have one September/November. It's like they're pushing the rate cuts out in time because they can. Let's see here. Went through the indexes. For this week, it's an earnings week. We've got a ton out here. For us, though, on Wednesday, Tuesday, we're going to pay attention to Coke, GE, General Motors, Visa, Google, and Verizon. Wednesday, Boeing and Meta report. Thursday, MasterCard, Love, and Ford. ExxonMobil on Friday. We've got a ton of earnings. People ask, why did I put so many in here? These are just some of the bigger ones that I want you guys to know about. I know I don't trade everything that you guys trade, but I'm trying to help you guys understand. I get this from briefings. Briefing.com. It's for free. Economic reports. Nothing Monday, Tuesday. Just checking to make sure that's right. Wednesday, NBA new home sales. Thursday, durable goods and GDP. GDP is set to be at 4%. Durable goods have been higher. GDP has been higher. That is a high number. It's my expectation that we're not going to hit that GDP number, and that'll be the push down for the week again. Friday, personal income, personal spending, and PC prices, which are vital for the Fed. If they come in higher than 0.3, our market's going to tank on Friday. Things you need to be aware of and keeping on your radar in the morning. A couple things we did. We did take off Baidu 127 puts for a great profit. And yes, we still have 110 Baidu puts on. So if you noticed last week, if you had Baidu shares, even though the market was down 2.39%, you were down somewhere in that 0.009 range. So you were down you were down 0.09%. You're almost down 0.1% on a 2.39% down market. So we did a great job making up 2.29% of the market as a whole. We made up. Really amazing, just to put that in perspective. And the market being the S&P, right? S&P was down 2.39. HI was down 0.007854 last week. Something else to pay attention to. I found this a little interesting as we were working our numbers to see if there's things that we are in trouble on or things that we need to do different. I am having a little bit of fun here. September, the S&P was down 4.87. October, the S&P was down 1.85. And the market is down almost 13% from the highs. Yeah, we are mostly flat, which is where we need to be. We are also becoming cash heavy. So we will be booking more profits on puts, and we will be looking at being cash heavy in accounts till we find a bottom. Find a bottom somewhere where we feel like we can invest in more shares. 30-year fixed mortgage rate just at 8%, highest since 2000. This is weighing on people's investments in the stock market. A lot of people keep asking me about Baidu. Kevin, why the hell are we still in Baidu? China plans to ease one of the biggest hurdles for foreign business. The Chinese markets are craving US dollars. We will have a significant upturn in Baidu with just a little bit of understanding of the Chinese market. Bank of America profit system on better than expected interest income. I have that one in here so you can see how Bank of America went. Popped up back down to where it was pre-earnings though. I kind of had this one in here because I'm laughing. I'm laughing because I'm not a Bill Ackman fan. I'm laughing because his losses are horrendous. He covers his short bet against bonds. If he's been short bonds the last 2 years, he has lost his shorts, meaning 60 to 75% loss. He is toast. Whoever was in that fund, billions of dollars have evaporated. And new interesting, Baidu's newest AI model, Ernie 4.0, fails to wow investors, but analysts remain buy ratings. I know analysts are sometimes called analists because they are just retarded. With that said, in general, Baidu has an average 182 buy target on it right now, with some higher than 200. There is a pop in Baidu coming, and for that reason, we are still in it. And with that said, hopefully this is some good education for you in what we're seeing. Questions. What questions do you guys have that I can answer for you? And Mary, you were asking about those indexes, and we will go to that point. Someone just asked, will we buy me more shares of Baidu? Anyone that has Baidu, we have took profits from, boy, 150, 135 on down. We are sitting on cash for Baidu shares that we have not yet put to use. In fact, some of you, if you're in Baidu, might have a large cash position already sitting in your accounts. Yes, we are going to put some of that and deploy some of that, but we just don't do it at a whim. In fact, thank goodness we were smart on adding shares. You don't just add it because you get the cash from a put. You keep that put on to protect to the downside. And I'm pretty sure our last ad was somewhere in that 135 in June, but we've been from 156 all the way down to 107. So we've lost, over 37% 7.5%. $50, yeah, it's just 35% or more. We don't just add it on. We have our death cross. We have our 8% down. We're looking for a bottom. And yes, we will be adding more BID shares for those cash heavy accounts. We just didn't randomly do it because we had the cash. We were smart in how we were holding on to cash. And we worried, I mean, I'll be 100% honest. If the last time we added was at the 133 range, seeing it go down to 123, we were smart. Back up to 150, we worried. 133 up to 150, 139, 150. We just were smart. Broke the 200-day, no more buying orders. We do have 107 up to at least 131, 136. There is a nice pop there. We might actually start off without shares, but try to just use a bull call like we're doing for Meta, just to be on the safe side because of our insecurities with the interest rates. So just something to keep in mind there. Are there any other questions? And again, sorry, Mary asked about our indexes and what we're using, and what I failed to tell you is institutional traders using the 50 and the 200-day simple moving average on the S&P to help them place buy and sell orders on the indexes, their funds, and on individual stocks. But that's the short and the skinny on the indexes. And Mary, if there's anything else you want me to speak on that, let me know. But I'm giving you going once, going twice. I hope this was helpful for you. We will be an earnings driven week for Monday, Tuesday, and Wednesday. Thursday, Friday, it'll be a mixture of earnings and those economic reports. And if a couple of those economic reports come in bad, PCE, GDP, boy, we're going to hit a bottom. We're going to fall again. And that's something that, in all honesty, should not be unexpected. You got to be smart with what you're looking at. All right, guys. Hey, have a good week. I will see you next Monday. And trade smart, trade with protection, hedge what you're doing. Really, there's no reason to be moving to the upside right now. All right. See you guys next Monday. Bye-bye.